All right, my beautiful friends. I decided to do this post market wrap up live. What an absolutely crazy, bizarre, off the Richter scale day. We're going to cover a lot of this. I mean, we're talking about crazy stuff. How we doing, everybody? I see you all coming in here. So we're going to do a little blow by blow here, right up until the market close, which is about 9 minutes from right now. Let's see what's going on. Let's have a little fun with this lovely thing we got going on here. I mean, have you been watching this? Have you been watching this day? I mean, let's just recap some of this. It's insane. Stocks opened down about 400, fell to the Dow Jones Industrial Average. Then we dropped to about 550 points lower. Then all that bond buying started to pay off. And the dollar started to weaken. It reversed. Stocks almost went positive. Then we started getting some selling here into the close. Really, with the weekend coming up here, I don't blame people for getting out of this market. Who knows? It's just too crazy. I mean, right now, let's put a perspective on this. It's insane. The low for the Dow was about 550. Right now, it's down at 189. I mean, that's incredible. What an unbelievable turnaround, seriously. And I know a lot of you are sitting here laughing, cracking up, because it's just too much. It's really too freaking much. I'm watching a couple of my open credit spreads. While I have you here, I have one that's closing on Pfizer, which I'm going to just skate by here. It looks like it's going to be a winner. Well, let's see what goes. I was going to close it just earlier, but looks okay for now. We got 8 minutes. Looks good. I did add a few new positions today. I will post all of them probably by Sunday when I do my markets a look ahead segment. That's going to be all kinds of interesting. But seriously, did you see what they did today? You want to talk about off the Richter scale bond buying, and then some miraculous thing happened. The dollar just reversed. Now, we understand. I mean, you don't got to be a rocket scientist here to understand what's going on here. When you got bond yields being suppressed, when you got a dollar that is weak, it is stock market positive. It's just craziness here, and I don't want people to get all worked up about this. I covered this earlier today. These gyrations in this market, they don't mean a damn thing to me. I'll be honest, it doesn't mean a darn thing. It's all about the bond market. Look, everyone here has got their googly eyes opened up, looking for the meltdown. Well, stop looking at the stock market if you're looking for the meltdown. It's not going to start there. It's going to start in the bond market. This is a normal correction, period, until otherwise. And again, we're going to see it right in front of our freaking face by sitting there and watching the bond market. Why do you think I put these charts on my website for you? For fun? So you can just sit there and look at them and for whatever reason? No, they're there for a reason, because I want you out here to focus on that bond market chart right underneath the chat room, right side of the page, and the dollar right below that. There's a reason why they're there. There's a reason for it. It's not for my own health. That's the truth. All right. Yeah, I know. I got to get drapes. I know. So let's see. Let's have some even more fun. All right. So now the Dow's under a little bit of pressure. It's still we cut our losses in less than half. At one point today, I swear to you, I thought we were going to go positive. We almost did. All the major indices were just a fraction lower. Let's see. Cryptos are about flat. Nothing going on here. Gold and silver up a little bit. Again, nothing going on there either. Just keep an eye on this one while I got you here on the phone. Okay. Anyway, let's see what else is happening in this lovely world we're living in, my beautiful friends. Hey, you know what? Let me cover this real quick. I don't know how many of you out here We're watching CNBC earlier, and they had they're parading everybody out there, and they had this guy out there, and he's talking about the accommodative Fed, and then you got the other one talking about the aggressive Fed. Uh, it's no secret. The Fed has been beyond accommodative, and they're still maintaining their accommodative stance. But my question seriously is, if this economy is very strong, that's the narrative here, why is the Fed remaining accommodative? Either one, I posted this, our economy is not that strong, or two, the Fed is remaining accommodative because our economy is not so strong. So is it one or two? You can't have it both ways. It's either one or two, and both are the same. It's propaganda that they're fist feeding us, double fist feeding us. But you know what? All the loveliness that's around you and I is kind of repelling all the fist feeding. The market is bipolar. It's the truth. But again, just get used to this right now. It's the way it's going to go, at least for now. Let's check on the lovely market. Lovely market. Let's see. Let me check. Let me look at this real quick. Yeah, they're still in there buying up those bonds like crazy. Go look at this. I mean, my website, traderschoice.net, go look at the bond market chart. Your eyeballs are going to explode. They're going to explode. Look at the dollar chart, too. You see a nice reversal there. It's just crazy. Absolutely crazy. But it's not going to stop. I can promise you, and I covered this yesterday. Was it yesterday? Yeah, I think so. When I explained how easy money is going to continue pouring into this market for as far as the eye can see, and even beyond that, that's the way it's going to go. That does not mean that the Fed is not going to incrementally, at a glacial pace, be raising rates. They are, but they are so far behind the curve that you can't even see it. It's just gone. It's out there in freaking la la land. That's the truth. And, don't listen to me. Listen to President Trump on this. He said it as candidate Trump. He explained this better than I could, I think. He thundered away at this stuff. But in this market right now, let me tell you, it's interesting how things change once people get into office. Don't you find that to be true? Completely disgusting in my view. Anyway, what are we doing here? How are we looking? You guys paying attention to this? Ooh, taking a nice leg lower here. Like I said, people don't want to be holding stocks here into the weekend. I don't blame anybody either. If you're trading anything naked, naked puts, naked calls, you don't want to be in this. You could take a royal freaking pounding on this deal. It's just uncool. It's very, very uncool. Yeah, that's okay. We'll see how this plays out next week. I mean, look, there's a couple of other things that are going on that we need to keep our eye on. If we continue to see this insane volatility like this moving into early next month, that wouldn't really, really surprise me too much. However, how freaking ever, if we end up seeing, I'm a little distracted here, I'm watching this too, but if we end up seeing market sell-offs, okay, after the first week next month, I'm not saying I'm going to be overly worried about it, but maybe slightly more concerned. But again, I'm going to be watching, just like you, at the bond market. And that's really the big deal here. Again, they're going to keep rates suppressed as far as I'm concerned for as far as the freaking eye can see. This is incredible what I'm watching here. Yes, Greggy! Look at this. Pfizer. All right. I had a credit spread on there with a 42. I sold 42.5 puts. It closed at 42.59, which means I get to keep all the premium. Pretty good. I'm happy about that. I was sweating this all day long. I will not lie. Some of these things, if you've been following my credit spreads over the past several months, you've seen probably 8 or 9 out of 10 close in the way that I wanted it to. So I'm a happy guy. And this year, I mean, I just squeezed this one out. Very nice, very nice. All right, look. So let's just summarize here at what happened here. All right, so the Dow Jones Industrial Average closed down 1.2% or 299. S&P closed down 47 or 1.75%. Nasdaq took the biggest hit of them all, down 2.06. Okay, okay. So what? Let's see what the 10-year did. Oh my goodness. 10-year yield, 3.079, and dollar finished down lower. So we really need to watch this going into next week, everybody. There is just no doubt about it. And I don't want to sound like a freaking perma bull here because I'm not. But I don't see sincerely major negatives with regard to this market right now. Yeah, we're getting a lot of gyrations. We're getting a lot of volatility here. So what? Again, what is the bond market telling you and me? It's telling us to just sit tight, relax, and watch everyone freak out while we, just watch the festivities. It's really the truth. So, I mean, let's end off with this before I give you my grand finale here. So we finished down well off the lows. Let me just see if it's settled out. All right. So the Dow Jones Industrial Average, like I said, closed down roughly 300. We were down 539 earlier. Let's put another perspective on this for all of my lovely, lovely friends that I love so much. It's the truth. This market has had virtually every excuse here to sell off. And I mean sell off hard. But it's not doing that. It's not doing that. And every single time we're seeing the same thing replay. Bonds keep getting bought up. Bonds keep getting bought up. So what does that tell you? It should send you a clear signal that we are nowhere near the big one here. This is not the big one until we see what happens in the bond market. That's it. That's the only freaking thing I care about is what the 10-year yield is doing. Until the 10-year yield tells both you and me that there is a problem, like Houston, we have a problem, then there is no problem. And this market is fake. This market is distorted. This market is absolutely in fantasy land, like you can't possibly believe. But this is nothing new either. We've been watching this play out for years. I'm not saying this is going to go on for years. I have no idea whatsoever when this is going to melt down. I don't care anymore. I don't think about it. I and you are trading the market we have, not the one we're dreaming about, thinking about, fantasizing over, foaming at the mouth over. That's just it. We're just not doing that. We're trading the market we have, and we are ripping its face off. That's the truth. I don't care. I don't care. And neither should you about how fake this market is or how rigged this market is. Good. How about metals? You want to talk about a rigged market that you just can't believe? Well, there you go. I mean, we know it's being faked by the major banks. Again, 5 in the last year alone have been caught red-handed doing it. It's not going to stop. It is not going to stop. So don't even dream about it. Anyway, I think we have a pretty good perspective on what is happening here, people, and so all the loveliness here, absolutely. So with that said, I'm going to leave you off with all kinds of loveliness. Here it's coming right at you. Loveliness, more loveliness, puffs all over the place. It's beautiful, and it's keeping us all warm and fuzzy. It's just the greatest. It really is. Look, people, it's Friday. You know what I'm going to say. It is just so, none of this matters anything at all. What does matter is that we love each other, care about each other, and be charitable. That's it. That's all that matters to me, people. And you all matter to me. And if we can adopt that philosophy of mine and yours, this world to be a much, much better place. I love all of you. I will see you Sunday on my markets. Lovely look ahead. It's going to be great. I'll see you then.